Hello traders, Gary Wagner here, just about 10:30 in Honolulu, 3:30 in New York. It is Wednesday, December 23rd, 2015, and this is the Daily Report for Gold and Silver. We do have the precious metals complex under moderate to soft pressure this morning, with gold trading off about $3 on the day, or 1/3% at 1069. High has been 1075.53 and the low 1068. So as you can see, once again, as we go into the holidays, we do have a tightened trading range, I believe, due to a decrease in volume. So traders, although we do have gold trading off a little bit this morning, you've got about the same percentage move in silver, although to the other side, up about 0.37%, or a total of about 5 cents on the day, putting silver currently at 14.30, let's call it, 14.22 on the low, 14.35 on the high. So traders, before we take a look at some of the activity in gold and some gold charts, did want to take a quick look at silver. We're looking at a weekly chart, and this weekly chart covers approximately 1 year in trading. You can see February of this year on this weekly chart coming in here, and just like gold at the beginning of the year came in and hit the record high for the year. Now when we use this fixed point and the lowest low that we've hit this year, which is just above, call it 1360, I've got this line just maybe a tick low, but nonetheless, it's giving us some valid numbers. So we're looking at a fib retracement, as I said, from 1850 down to about 1340. And when we do that, we can see that the next real level of resistance, major resistance, is a 23% retracement. And that absolutely comes in roughly at 1474. However, before we get that, we've got the psychological or benchmark number of $14, and I believe that that is our support area, with our major support at these lows, call it at around 1365, 14 on the support side, and then resistance, we've got our major resistance 1474 and minor resistance, which is right here. We can see really historically over the year where this really provided some support and resistance, part and parcel of the same thing, but that comes in at around 1450. So those are the numbers that you want to look at in terms of critical areas in silver through the rest of the year. So traders, as we wind down this year, I want to take a look, just as we just did with silver, at some of the more long-term as well as interim terms, areas to look for support and resistance. My overall look or forecast has still got some real bearish tendencies. I have not seen the kind of technical confirmation we would need to see to say that we have in fact reached a key point in the market, a pivotal point in the market, and we are going back into a bull market. I've not seen that technical evidence. So until that, we've got to have a bearish kind of bent to the market. About the only thing that we can say or see is that we do have this double bottom that came in. Of course, this is a daily chart, so it's not providing a ton of data, but you've got this double bottom down here. That's about the only real bullish thing that we can see, is that we absolutely have support at around 1045. I still believe, as I said before, we looked at 1037. We talked about that even 2 and 3 months ago as a key area, and 1000 as a key area. I still think that the likelihood of the occurrence of that is actually well above a 50-50 probability, probably more like 70-30. Now, how am I looking at this current market, as well as what levels do we believe are critical to watch? To do that, I've created 2 fib retracements. Just as we looked at silver, if you come in, this is the beginning of the year 2015, and the major rally in 2015 occurred during the first month, taking it to above 1307, and from there we moved back down to about 1145. That was the really biggest or sizable rally, except for this rally from 1191 down to these lows. That was the second largest move that we witnessed over the year in gold. We had it trade sideways for quite some time, but when we do that and when we put in our major levels, the first level that really comes in is a 23% retracement at 1106. And so 1106 is really major resistance. We have minor resistance, which we'll talk about in a second. And then we also have to this major level at 1106, this 38% retracement that comes in from the shorter term of these two fib retracements. And once again, we're looking at what I believe to be an area of harmonics, 1106, 1101. As you know, we've done other studies throughout the year, and 1103 was a number that just kept occurring over and over again. We know 1100 is important just as a century mark or a 100 mark, but this number I believe is critical, and before we can have technical confirmation that we've actually moved back to any kind of a bull run in the market, that's the number we've got to take out, which is roughly 1103 to 1106. Now, secondary, we'll have to kind of enlarge this, and we'll take a look at this shorter term of the two fib retracements. When we do that, this is from 1191 down to these lows at 1045. First level is 1079, 1080. That comes in right here. And we know that that's really the mark we've got to see before we can even believe that we're out of this current tailspin that we've gotten ourselves into, or gold has gotten itself into. You can see a lot of historical data where this area was very much an area of critical resistance, and without the ability to break above it, we saw it just track to lower pricing. Of course, this area was breached initially as the market came down from 1191, and that is back towards the first or second week of October, after having a nice rally in which the market moved from about what, 1110 all the way up to 1191. So about an $80 rally in the market, and that was followed by a double that in terms of market moves or dollars drawdown as we watch gold trade from literally $1,200 down to 1045. So we had quite a considerable move in the market. We have sidelined. We'll look to see what, if anything, we're going to put on right after the holiday occurs. That's the end of this week, of course. At that point, we go into a shortened week next week for New Year's. But my sense is, without breaking above 1080, I really can't get bullish, and I will look at these areas as areas to initiate short positions. This has been Gary Wagner, wishing you, as always, good trading, and most importantly, wishing you a happy holiday season. Bye-bye.